it's just hard to achieve consensus with this set of peers. Everyone's got to be comfy, have their drink.
Best panel when we argue.
Keep changing the peer list. What are you looking for? Hold on. Do you need it? Do you need help? You're gonna get it. Okay, you should have just told me. Yes. Very good.
Are we ready?
Ready.
How we doing? I think you can turn us up a little bit. Hello. Hello. Yeah. Yeah, I think that'll be good. We're not gonna be screaming up here, so. Yeah. One moment. Oh, I see what happened. Okay. Hey everybody. Sorry about the delay there. Technical difficulties. Normally we have our shit together. Is anybody here not been here before? Yeah, I seen some new people. Oh, look, so many of you. Okay, cool. How'd you make your way down here? How'd you find us?
Don't say meetup. Wait, raise your hand if it's meetup.com. Wow.
All right, we got some
Still
meetups.
those numbers.
Tango's a friend from Austria.
Oh, that's way out there. Okay.
All right.
LinkedIn?
Very cool.
No? No one? Yeah,
and
it's not
how
on it.
what about you? Oh, okay, nice, sweet. What's your name? Sally? Nice to meet you. Thanks for joining us. Thanks, Alex, for bringing them. Okay, so we're just like pretty informal, honestly. Like sometimes we're like have like a structured presentation and you like learn things. But this time, you know, sometimes we just do like a little panel up here. Like, so we are like, I don't know, we hang out here a lot and we like to just talk about crypto stuff with our friends. So we just are gonna have like a conversation about like what's going on in like the industry that we're like involved in. And if you guys want to talk about anything, just let me know and we can engage. No like expectations or anything.
If you interrupt, we gotta pass you a mic. Otherwise, you won't be on the stream.
We're live streaming to a bunch of people at home, so that you recorded on YouTube. And I think we could do like really quick introduction down the line, starting with James over here. Like 1 minute, even less, 30 seconds. Whatever.
1 minute's a bit long, yeah. I'm
Okay,
Biggles.
10 seconds.
Hey guys, welcome everybody. This is EthVan, Decontrol. Yeah, we talk crypto. I come here a lot. Talk to these guys a lot. A lot of these other guys build in the space. I participate. I do things on chain. I trade. I DeFi farm. I just do a lot of stuff in crypto. I'm always interested in learning more.
I'm Stephanie. I've been coming here a couple years now. I've been various different roles at crypto companies along the way. I was a researcher, and then I helped lead a project in the layer 2 or like Ethereum ecosystem. And now I'm more of a free agent and just trying to do better at participating on chain and managing kind of my own stuff while I look for my next thing.
Hey, I'm Christian. I do things around here to like keep things organized sometimes, and you know, been at EthVan since day one. It was actually February 2022, so it's been like 3.5 years, and we've been doing this almost every week, give or take. So that's pretty awesome that, you know, and a lot of people have been here since like the beginning. So you know, it's a cool thing that's like kept us all together. I'm building a few different things in crypto. One is like Superform, which is a like multi-chain yield protocol. So like the vision's like make it really easy to earn in DeFi because like the average person like can't really figure it out. It's like pretty complicated and abstract. So just like as easy as it is to like buy a stock on Robinhood, you can like invest in DeFi basically. Also building Hyperliquid Names, which is a name service on Hyperliquid. Check that out. And if anybody here is like a hacker, like is like build stuff, we're also organizing a Hyperliquid community hackathon. With it's ongoing for another like week and a half. You still have. If you do HL_hackathon on Twitter, you can find all the information. And there's $250,000 in prizes. So if you are interested in like hacking away at something, like check it out. Yeah.
Last week is where the magic happens. Anyway.
Exactly. Yeah. So you're not late. Like you can build something in like a day. So check it out. I think some people in this room are like building cool stuff already. So. Yeah, I would love to have more participants in that. I think there's already like 300 people or something like signed up, so it's like pretty cool to see. Anyway, that's my 10 seconds, and I'll pass it over to this guy.
Welcome. I'm a guest panelist, possibly even an intern. I like Ethereum.
That was not 10 seconds. I think Christian took more time, so it evens out. Yeah, I'm Jazzy. I also do blockchains. Is it working? Yeah. I'm a hacker by trade. I've been hacking computers my whole life, and now I do a lot of blockchain hacking. From Ethereum to other chains to whatever I can find my hands on.
Audits.
A lot of audits.
Awesome. All right, thanks guys. Appreciate that. I mean, most of you just already know who we are, but. I don't know. Might as well. Nice. You guys will come up later, and you can introduce yourselves too if you want. Okay, so, well, I asked ChatGPT what we should talk about today.
Christian, don't admit it.
No, I just want to see what it would say, and it's actually kind of cool. So we did the welcome and framing for 5 minutes, as you can see. And the next one is macro and market context. I don't know if we'll start there actually.
Why don't we just start?
Oh no, this is relevant actually. Yeah. But no, what were you gonna say?
Well, I mean, I think there's like a number of things we can get to, but like macro, whatever context, like everything seems to be going up, or like ETH is up now. Did it pass its all-time high?
No,
it did not. Almost.
Okay, but yeah, the prices of crypto assets are generally trending upwards, and some people might find that exciting.
But it feels I'm not typically the person to be like price, like considering that, but I just found it interesting because I'm wanting to understand like what mechanisms are making the push so hard, because it just seems almost out of nowhere, at least from my perspective. I know there's a few things that happened this week we could talk about, but it just seems like an awful lot all at once.
I think it's like.
Pardon?
He said melt up. Tell us what I'm.
I don't know why it's called that, but they say it's a melt up. It's like forced buying.
So like
many people were offsides.
Yeah, that's it.
Many players are offsides.
So there's been a lot of like positive things that have happened in the past like year, but a lot of people were like he says offside, or like they weren't invested, right? And now everyone's like it's FOMO. Like he's like
when. Okay.
Why not?
When this man with beautiful hair goes on CNBC and says Ethereum is the future, you must buy it. In the language of TradFi.
That was Larry?
No, let's talk Tom Lee.
Tom Lee.
Oh, Tom Lee.
Get it right.
Tom Lee and Joseph Lubin.
Yeah, exactly. Like when it's being shilled all the time to TradFi, and it's appearing in your Bloomberg terminal, you're like, oh my God, how was I not exposed to this? I have to buy it.
Yeah.
So you're saying that like there's a lot more coverage in like normie and TradFi world in crypto, and the sentiment is positive, and hence it's translating to price action, and they've kind of decided to. I mean, there's always been people in TradFi who care, but more on volume now.
Exactly. It seems like an institutional bid, and it's just setting the stage for some strong allocation.
Yeah, like ETH was like it's been like slowly going up, underperforming Bitcoin, so no one is really like paying attention. But the fundamentals have been getting stronger and stronger. And then at a certain point, it's like the melt up, because like it gets to a certain point where people are like, oh shit, like I actually need to buy this, and then other people are like, oh shit, I need to buy this, and now it's gone up like 2x in like a very short time. And if you're a fund manager or some kind of institution, you don't have exposure to this, like your shareholders, whoever else, like why the fuck are we not exposed to this thing that just doubled in like a few weeks? Like what are you doing? You're an idiot. So and then it just compounds.
Yeah, it's structural. I think if I had to go back and define it, it's like structural. It may not even be actually supply based, but you know where the avenues where these funds are buying or allocating to the asset are, they have to go when they run out. They have to go get more. So it's like the supply and exchanges could run out.
I mean, I think we're like not considering the main thing that happened in the past few weeks. Treasury companies.
Yeah, that's who I mean by. Madman bid.
Like essentially, a lot of people realize, they can run back the playbook of MicroStrategy, where they take a public company, they use it to buy Ethereum, and then they sell it at like a premium on the open market because people want exposure on the open market, and they are getting it through these treasury companies. And they seem to have been the play of the month in the past, few weeks. Everyone is making a new treasury company. There is a lot of them on Ethereum, and they're all buying up a lot of ETH. Hence, price go up.
But I guess like this is not new in the sense that people have been making assets or treasury companies or ETFs for like a long time, but now it just like is gaining more traction.
I mean, our ETFs were around, but the treasury companies, there's been a new resurgence in the past couple months.
Sorry, would you mind describing like for like I don't know much. Like I understand what an ETF is. It's like effectively like a wrapper that represents ETH, and you can buy it. Like I have it in my like brokerage account or whatever. But how does the structure differ from a treasury? It's just a company that buys.
It's the size. It's the size of these new treasury companies that have come in. Stuff like Bitmine and SharpLink are buying so much ETH. Like Bitmine, Tom Lee announced that he wanted to accumulate 5% of the entire supply of ETH, and he just broke over 1 million ETH accumulated just last week. And they're just like pushing at each other and competing. And that's why we just haven't seen any dips. I mean, we saw one this morning, but that was after a $1,200 price move. So it's not just ETH either, though. There's other treasury vehicles starting to accumulate things like Hyperliquid, like Athena, and like Aave, and other plays that are out there that, these are probably how we get our next bear market, right? It's just something blows up because they're over-levering, trying to copy Saylor's playbook. But at the end of the day, like a lot of these coins, they're not Bitcoin, and they'll have the reflexive loop to the downside as much as they will the upside. But in the meantime, it is melt up, and that's good for our backs.
Even with like Saylor's playbook, like Saylor is very good at financial engineering. It's hard to like directly copy the MicroStrategy playbook. Like a lot of treasury companies just raise initial capital and they use it to buy ETH. Like Saylor's playbook is much more. They're able to raise debt with, I believe, convertible bonds that convert to equity at a certain strike price, which they expire in like a few years. But it's a lot more safer because the downside there is still like whoever gave them the debt, either they get the money back or they get equity in the company. So whereas these new treasury companies are basically just, hey, we're raising almost like a new fund. It's a hedge fund, but as like a publicly trading company, and you can buy it at a premium in the public market. And I don't think that really leads to excessive downside per se, because there's no there's no force redemptions for these assets. Like you're buying this as a proxy to get exposure to this asset that you want on the public market, but you as a shareholder can't really force them to give you the asset back. So the share could be trading, the share could be trading at a price that's lower than the total like treasury assets to hold, and it still won't really liquidate. It's because of the way they're set up.
Very good explanation.
Are you saying it's no risk leverage?
I mean, it's not really even leverage because they're not levering up. They're just buying spot based on the money they've raised.
So we're fine.
At least for now. I assume someone will start levering up very soon, or someone will realize they can, make more money by levering it up. So we're fine for now. We may not be in 6 months.
All right. So we're not fine.
I think it's interesting how these companies are going to be able to make productive yield on their assets, other than what the Bitcoin companies have been not really able to do in the same way.
Why do you want yield on these assets?
Excuse me?
I mean, why do you want yield on the assets? Why don't you?
People always want more.
Why wouldn't you want yield?
Like, if they have so much ETH, why don't they deploy it?
I mean, as a treasury company, right? You're trying to capture the premium between your net asset value, as like how much ETH you hold versus how much you can sell your stock at in the open market. Like most of them are trying to capture that premium versus trying to like reuse the assets they have in the company.
But don't you think it's still to their advantage to like just do that on the side?
I mean,
and like maybe you're not reflect that in what people can redeem, I guess.
I mean, you can do it on the side, but I feel like the value they will gain from there is still much lower than the premium they can get on the open market.
But don't you still benefit from both? And even if it's only like 3 or 5%, it's still something.
Yeah, I mean, like obviously you can do both. It's like where do you want to focus on as a company?
But it's
But
like
I mean,
two,
acquiring
it's like
ETH isn't that
two
difficult.
clicks to like deploy it.
Yeah, like and acquiring ETH, like you know what I mean?
Yeah,
Like
I mean, it's 2 clicks to deploy, but you're also like as a company, you have like 3 custodians you have to get past to like actually deploy something on chain. It's not like a single person
Okay,
holding
yeah.
the private key.
Yeah.
At least I hope not. I feel like a very interesting way we get in the bear market is one of these treasury companies gets hacked, and now there is a big regulatory like action into crypto because it's like this whole public company just got like blasted it to zero. That will cause a lot more problems than we will have at the industry.
do you guys think that perhaps like because I know that there's, like you said, there's other treasury companies popping up, but it's mainly Ethereum at the moment, or ETH at the moment. Do you think that, like, I'm trying to think of like, maybe I'm thinking too much. I'm trying to think of like what prompted this, right? And like 2 things I can think of is like one, maybe the Ethereum Foundation changing their strategy and like trying to like be more like focused on marketing and like getting people involved and not so like passive. At some point, maybe 6 months ago, that kind of led to this interest. And then 2, I think maybe because Bitcoin's now hit like 120K, everybody who like missed Bitcoin or like, the more conservative TradFi investors like, fuck, like how could I miss this? Like, whatever.
It's FOMO,
okay, well, what's the next thing? And so that's like why ramping up.
Yeah, it's going to keep going down the risk curve. You have like Solana and hype in these things. You're going to have like XRP, and then you're going to have like Dogecoin that's going to keep going till it gets too much. And then.
Yeah, I mean, most people making these treasury companies are not like crypto native people. People that are making these companies are like TradFi people who have, finally realized that there's this like large arbitrage in the market that's available. Because, like MicroStrategy has been doing this for a while, but it was only really we have had like a resurgence of like TradFi interest in crypto when ETFs launched, a couple of years ago. ETH1 launched last year. We realized, there is just still a lot more money they can extract from crypto with these treasury companies that they just didn't have before. A lot of these, TradFi people have realized that why are we not doing this? And this is why we have a lot more treasury companies.
I think whether they succeed or not depends on.
I think we've already succeeded. Like all these companies are trading at a premium over the net, net assets they have in the company. So there are in a
couple, the top couple.
Yeah.
There are some that are trading under NAV even still. Like some have performed pretty poorly actually over the last couple weeks when ETH has just been ripping. So why would you expose yourself to more risk, custodians, all these things other than just buying ETH? And this is like the fundamental problem with it. It's like, why would I want the company below it when I could just get the native asset itself that they are targeting to accumulate?
Well, maybe people will start to think that themselves, and like that could lead more people on chain, or maybe that's just wishful thinking. Because I think it's a reasonable thought. Like, why do you want to get the worst side of the trade by purchasing that asset that they're just holding, and then they win and you don't really?
I mean, it's the same reason. I mean, same reason, like why were people buying MicroStrategy over just buying Bitcoin?
Yeah, exactly. Oh, that's huge. Yeah. So in the United States as well, they announced, well, what was that new rule that essentially 401ks can now get exposure to any asset, essentially opening up the doors for assets in 401ks. That is a huge, massive shift in like fundamental underpinnings of like what it could mean for a lot of these industrial assets in the States.
Did it actually is that a thing that happened? I feel like it's something that's like being discussed, but I don't think they
never proved it yet.
No, I think Trump was just like yapping about it. It definitely would probably bring a lot more people to.
I mean, even
invest
in a 401k right now, you can buy Bitcoin ETFs.
Well, that's it. But then it's exactly the thing. Why are people not doing the on-chain thing? Because like a lot of people just like can't, or like there's tax advantages, or like whatever. Like it's a lot easier to just buy like something on like the Nasdaq than to self-custody your Ethereum, right? Especially for like boomer TradFi people.
I think the abstracting away the liability of holding the coin is also another selling factor for some of these people that don't understand wallets or any of that stuff. Yeah. And they can call up Fidelity and say, freeze my account. You know, somebody got access. So
exactly that. You know, most of these people they don't want.
Still risk.
Yeah, like they find it more valuable to have those like checks in place than to like self custody. Like they don't want to. They don't see the value in it. Like you self custody so that you like don't have to trust the bank, but like they are like the bank, so like why? Like they're in the system, so like they're not the type of people they're not like the target audience, I guess, at this time of like the self custody, but you know.
Yeah,
we'll get there.
Self-custodying is also a high-skill barrier for most people.
Mm-hmm.
It's like managing your private keys is not a trivial problem. So we can wish that people will self-custody, but it really won't happen with most of the world.
Yeah. Well, like most people are not gonna like use crypto by managing a private key, right? Like now you're just gonna like log in with your Google account and. You don't have to ever touch the private key.
Yes, in a way. Sorry. No, sorry.
I was just gonna say, like, I understand there's like abstractions, right? Or people are working on solutions whereby you could use a Google account to sign in, but isn't that always going to add an element of trust? Like, you might have one thing on your computer and they have another thing, and you put it together and it becomes something to. I don't know how the systems work.
Yeah, some kind of like MCP or like or MPC or like some other solution. But generally, it's not like you're not trusting like one person. Yeah, there's gonna be like maybe like a few different pieces of this key, and you'll hold one, and some third party hold another, and somebody holds another. But yeah,
they would never be able to rug you.
Not by themselves, no. And
what if somebody gets a hold of like your shard?
Sure, well that's going to be on like your phone, or like device, or in your Google account, or like wherever this like thing is like stored. So yeah, but yes, there is an additional level of trust if you don't want to just have your private key written down on a piece of paper. And then yes, this is something else that you can do. That I think again, most people will do this. Like if there's any way you're gonna have people who are not wanting to like deal with all that and actually have them use crypto, they're gonna be using these more abstracted solutions. Yeah, please.
Say one big one. I think we're still probably far off from being able to make this a use case of self-custody is collateral for loans or mortgages, financial products.
Mm-hmm.
You have your assets in a bank, it's easy to use it as collateral for other repurposing. It's hard to verify KYC on this self-custody wallet that yes, these are my funds and I won't be removing them.
Well, yeah. It's technically like possible today. Like there's somebody in the world out there who would give you money against like your crypto holdings, right? Maybe not like the bank today, but like it's possible. It'll become easier, right? Like, right now I could technically sign a message and say, hey, I'm Christian, and this proves that I own this wallet. and then you can be like, okay, yeah, that's your money, and you can draft a contract to money against that. You can in as well, but like yeah, it's not like super accessible. But I think it's something that's going to come pretty soon, like in the same way that being abstracted for the eventual like end user person who's like doesn't need to understand what's happening under the hood. So it will be as easy as like just going, even easier, I think, for the average person to just in a few taps on their phone like borrow money against their crypto. What do you mean? Oh, yeah. Uncollateralized. Well, I know you need some kind of like DeFi credit score or something, or yeah.
I don't think anyone's really solved that yet, like an under collateralized loan.
Maple's
like
kind of got a hand on it, like Syrup, the new.
I'm not aware.
It's not even new. It was around in 2020.
Like I don't know if I would call them having a handle on it with their
they're
still
yeah,
they had a-
custodians, but they do over
It's the little tiny handle on the jug.
It's the like
The
when I think of their handle.
It's showing that it can be done.
When I think of their handle, I just remember the story where they lent people money based on motorbikes.
Was that Maple?
That was also
I thought that was just on Cello, like some like.
That was Maple.
What do you mean,
was
what do you
it?
mean motorbikes?
So Maple as a product is we will give you under collateralized lending based on like real world assets, and then they lent a bunch of people in Kenya money based on like collateralized by motorbikes.
Oh yeah.
That was Maple, and then they had to underwrite that all to zero because they would not pay back the money, and the
that's
motorbikes.
crazy,
You should
man.
dig up.
I'm gonna tell
I
the
did
joke
a-
again. The syrup jug, that handle is not meant to be used.
If
So
you
they don't have it.
if you want to ever look for something fun, like one of my first, actually like my first panel in crypto I ever did in like 2021 or something for a Masari event was I like interviewed the person who was responsible for making this program, and I kept asking, well, how do you handle it if they leave the bikes? And no one answered me. Like there was no like, it didn't like, I don't think that they had a system in place, and it was like still yet to be implemented, or like it hadn't been like fully realized. But that's interesting to hear that continued on, because I never felt like the system really had like a closed loop like that.
Like I don't think Maple had a system back then. Their system was we just trust these people to pay us back the money. It was very much these lenders are semi-trusted. We know them from somewhere, and hopefully by God's will they will pay us back.
But you can extend that into the banking system pretty far, that kind of model, and you can get a lot of lending. And I mean, we saw it last cycle with people who we shouldn't have been lending to. And like that's going to be where all this leverage does build up and who's defaulting and stuff like that. But it is something that's being built out. It's slow. There is trust space baked into the whole process.
But like even for like under collateralized lending, I feel like it's much easier to give them to institutions versus to like individuals. Like at least in like our world right now, right? Like banks are able to give us a loan because they use if you get a mortgage, they use our house as collateral. If you were to do similar for a DeFi app to give you under collateralized loan, they still need to have some sort of collateral, some sort of guarantee you provide them.
Jazzy, isn't it the case that they are happy to be like the originator of loans, and then they sell it to someone else that has to worry about collecting and balancing the the accounts?
Like who are you talking about?
Like banks. Like, don't they actually prefer to be the originator? Like, they will, disperse it at certain terms, and then like someone that's willing to eat more risk, some other institution will buy it from them and be the the guarantor. I think this is how it actually plays out right now. So, I mean, that seems fine for composability. Like, you could imagine a marketplace on DeFi of such things.
I mean, you could have at least even in like even in that system in banks, it's still very, very localized, right? It's like you are trusting that you're able to enforce this against this like counterparty that lives in the same country as you in probably the same province who is giving you the loan. If you were to make it global, I think there's a lot more risk that becomes like you would have to ideally have like either you would make it hyper localized where you're only matched with counterparties and you can have like real life agreements with them where you just do the same thing as a bank but using a smart contract where you can still enforce it in real life. versus like having it being a global DeFi app where someone from country A can borrow money from someone from country B, but country B has no way to enforce their like laws in country A.
Yeah. Jurisdiction.
So my question is the crypto community opposed to kind of adopting the traditional safeties which normal financial solutions give? Like you can self-host your sorry, is that the right? Self-custody your Bitcoin and other coins as well. But if you want to do more involved financial transactions, you can kind of go into the public market with safeties. Yeah, you just move coins from your self-custody wallet to a more traditional wallet, and then you kind of do stuff on like for all to see. But when you want to keep your coins and stuff, you can always just put it back when you're done. That way, governments are like, okay, we know where he is, we know where they are. If things go wrong, we just kick their door down. Opposed to, they want to be anonymous. Well, what are they doing?
Well, no, I think it's, if I understand correctly, right? Like imagine
escrow,
you give
right?
an under collateralized loan on chain, right? You would send, as the issuer of that loan, you would send that to the recipient's wallet address, and then hence that would be by default public. So if then you took out this under collateralized loan, and I sent you the money, that would already be available to see for everybody. And then whatever you do with it, whether you like withdraw it to the real world or whether you do a business with somebody else on chain, like you could track that to a degree. The problem I think in crypto is like what we're used to is like if you do that and like let's say you take it out of the system, I see you give the money, I see you send it to an exchange and take it out of the exchange. At that point, it's just gone, and like maybe you're using it for cash for whatever for your business. But I have no way to like all I can do is see where you took it, but like I can't go further as to like arbitrate that if I'm just a universal issuer like in a different part of the world. I don't know if that answers your question.
You brought up a point. So are you suggesting a system where if I'm issuing a loan in coins, you can't exchange that for fiat currency? You have to actually use it within that kind of ecosystem chamber.
Well, I mean, so traditionally in crypto, how it works, if you want to take out a loan, and like the only systems that are like really sustainable that exist, that already exist and have existed for years, are like lending platforms like Aave, or there's many others where you have to deposit a certain amount of collateral as like your collateral, a certain amount of whatever, and then you can like take out more against that. So it's like an over collateralized loan. And then if you like, if the price of that asset, it's like there's like different ratios where you could get like your funds seized, like different actions, like you don't give it back in a certain time period. It's not usually like that. Or like the price of your collateral like decreases and now you owe more money. And then eventually they could just like it's all built into code, but they could like take that from you and like that's what they hold against you. So if you run away with the money, never come back, it's okay. Like they have their like standard kind of what they've expected already on the table. The issue then applies to like that's the only loan that exists within crypto, and like there's no way to like track it once it gets out of the system, if that makes sense. If you were to do it and not have that collateral is kind of what we're discussing.
Yeah, like the under collateralized is like you have less of the value right now, and there's some penalty for not paying it back on time or meeting like the obligations. So it's more like you have nothing at stake, and that's the problem. So like, how do we take your physical assets and like put them at stake in some way? Maybe like transfer them in escrow, or we threaten them in some way as part of the agreement, so that you have an incentive to pay back.
I mean, I think one thing we also didn't mention under collateralized loans is like we have a system similar to how your brokerage gives you margin. That already exists in crypto. For example, if you own a bunch of stock at some stockbroker, you can take margin against that and buy some more stock with that margin. And essentially, if the total value of your portfolio goes down a certain amount, which is your like maintenance margin, then they liquidate your portfolio on the stockbroker. You're not really allowed to like withdraw that margin for the most part. You can maybe withdraw like some small part of it, but for the most part, like that whole thing stays in like your stockbroker's ecosystem. So in case you our default or the amount of money you borrowed is less than the amount of assets you have, they can liquidate you. We have a similar, like there's a few products in like crypto as well that are similar. We have Gearbox, we have Sentiment, we have a Delta Prime. They all do very similar things where, you can deposit like $100 and you can buy assets worth up to $300 or $400, but they need to like stay under their ecosystem so they have control over that. So you can get exposure to like certain whitelisted assets that they have allowed in their like ecosystem. And if the prices of those, if the price of the money or if the price of the assets that you borrowed is like getting low enough that you may not be able to pay back the margin loan you have like borrowed, then they liquidate you, just like your stockbroker. So like that is under collateralized lending we already have.
There is a platform if you do want to do under collateralized lending or loans. It's called Wildcat, and they do peer-to-peer. So you would specify your terms, and then someone else can come in. You can actually give, it's basically like credit on chain.
Like Wildcard is also very much built on Trust Me, bro.
Yeah. Well, it's a trust. It's a trust based. Yeah, and you basically like set your terms, and then you need people with a certain level of trust to take those terms, and you're giving them credit. Yeah, but if you do actually want under collateralized loans, check out Wildcat.
Do you know what the rates are on those right now?
You can set your rate.
You can set your rates. Last few rates, a few companies did it for Plasma. There was one by Wintermute. They're anywhere from 12 to 18%.
12 to 18?
12 to 18.
A bit more than a mortgage.
What happens if you don't pay it back?
I'm very sorry.
Why would anybody use that?
Because generally the counterparty on these loans are like large crypto trading firms or like Wintermute.
Something to
like
some
of the
like
essentially the counterparty is someone that has a social reputation
to
maintain.
So again, so it's reputation based, just like
that makes
sense.
Counterparty for the most of them has been Wintermute, and the recent one was Split Capital for their like Plasma loans.
So out of all this, what I'm getting is like the technology, we're pretty much there. We have it. It's available. What we're waiting on is like banks to get their shit together and recognize that they can actually utilize this stuff, use this stuff, and maybe, who knows, we might actually see like on-chain lending offered by banks in the future. And that would be a way that you don't actually have to pull your money out of crypto back into bank accounts and do this whole back and forth process. It's the whole idea of we should be bringing the world on-chain. And that would be amazing, like if they're utilizing Gearbox so that I can go and borrow against my Bitcoin and buy a house. Be sick.
Or it could also be the other way around, where you could use the money in your banks to like borrow money from on-chain. For example, Coinbase recently added support for Morpho loans. You can essentially use the money in your Coinbase accounts to borrow on-chain from Morpho. I think is very, very useful. Like it gives Morpho a lot of distribution as well, but I think it's a very cool product that is like very early, but it can get a lot of adoption.
How does something like that work if you pull the underlying cash from Coinbase? You pull the loan.
Coinbase won't let you pull it out. Because it's on Coinbase, right? Like you can borrow money through Morpho on Coinbase. You get the money in your Coinbase account. You can't. It's the same as the money stays in the Coinbase ecosystem, so they have control over your assets.
Pretty much the under collateralized loans cannot work without some sort of central.
Or like some sort of like reputation based thing. Like but some kind of like
I mean like you gotta have some sort of collateral. Like, I mean even with banks, right? Like your mortgage, your house is collateral.
Yeah, that's it. So again, your reputation is at stake, or you have basically you need some kind of like on-chain credit score, or like some universally recognized system that you can, if you don't pay it back, like that makes you less advantaged in trying to get a loan in the future from somebody else. Right?
But the problem there is, right, like in real life, you can't just get a new social security number. And on-chain, you can just get a new address anytime you want.
Yeah.
Which means the reputation system is very hard to enforce on-chain.
Yeah, that's why it has to come from like probably like the real world, or like you have to start somewhere, right?
Like I think Base needs to add like KYC Coinbase address with X reputation score. That would be pretty funny.
There's things like Katana, other layer 2s that like offer only essentially KYC, AML offerings to like banks could be using some like a layer 2 like that. Could they not? Like Katana?
Could you repeat the question?
Couldn't like a bank just use something like Katana, like a layer 2 like Katana, which like by default is like KYC, AML, like in order to use it, and then problem solved?
I mean, wait, when you say bank could use it, what would the bank use it for?
Offering, like I use bank like quite broadly, but like any lender.
Any lender could use it, but like where like it's KYC enforced, but like I think the main problem there is still the jurisdiction of like where the KYC is from. You know, if the lender and the borrower are in different jurisdictions, they can't like legally enforce any contract they have between them unless they go above and beyond. You need to have a lot of like legal resources to like really enforce any sort of like contract between two parties. Like banks have that, but most people don't.
Pivot and talk a bit about Circle's new layer 1 or like Stripe's new layer 1s and like what that means.
Yeah.
Just like what much time left?
Yeah, we can talk for like 5-10 minutes about that. I think that's okay. You guys mind? 5 minutes? All good? Oliver, you okay with that, man? Yeah. Oliver approved. What do you want to say?
I don't know. I'm really not paying attention as closely to provide, I think, a good enough analysis onto like, you know, why they're doing it and if it's good, but it just kind of reminds me of like cycles past, just like, you know, some big name comes in and says they're going to make an L1 or an L2, and then I guess it hasn't really ever materialized, or like maybe it does, or I don't know. It's just like never, it just seems, I don't want to say misguided, because you know what, everybody has their like strategy, but, and I understand like Circle controls like so much anyway with USDC, and I could see the advantage to them, but like as per Stripe, it's like, why make your own blockchain if you could just use Ethereum? Like really,
because
like,
they can't capture like fees
Fair.
from Ethereum, right? They want these
Fair.
big companies just want to own the whole stack.
And it's interesting they're going back to the layer. Well, I guess they want to own the whole stack.
Yeah.
They're just like not buying the like L2 like with the easier kind of, you know, oh, the sequencer's lightweight, you don't have to like worry about all this shit.
Well, like
But
a
they're
million
nah.
L2s came out, and how many are not dead now? Like that thesis was just wrong, right?
I mean, what's the reason, you know, anyone makes their own L1?
Control.
Control. No, I think, I mean, the main reason people make their own L1 is so they can capture the value of the whole stack. It's like if you have a really, really good application that is built on some other chain, you're still like leaking value to the base chain. So
But,
the
like,
application
minimal.
becomes super, huh?
But minimal, right? Like let's say you made like this payment system for Stripe, and like you, oh, I guess because the
They can charge whatever they want. They can do whatever they want.
yeah,
They
but
have
on the
full-
L2 they could charge whatever they wanted, and then they would just like the margin, like the cost to then post that to Ethereum, I think would be relatively low. Like as it's getting better and better, like they're not really leaking
No,
that much.
But like, why would you like? What
Leak
is the
any?
difference between an L2 and an L1? Why do you want to post your proofs to an L1 when you can just not post them anywhere and it's L1?
But like,
what
oh, so
really
you
is
just
a
control the
L2?
validators, that you have like 4 validators, and it doesn't really matter.
Like when you
Okay.
think of an L2, what is an L2?
I see.
L2 is just, you know, there's a bunch of validators that agree on a thing, and then you post it on Ethereum because you're Ethereum aligned.
Yeah.
You're like,
But
I
is there
I
not an
believe in
argument
Ethereum.
that it's like lighter weight, the sequencer? Is that like, isn't that not true in and of itself? And like,
It's not really lighter weight.
you
If
can
you're
outsource the economic security, or
Yeah, it's aggregating it with some more security.
I mean, you can outsource economic security, but for like, for like a chain that is run by Stripe, they would just have
Yeah.
a validator set they control, and they
That's
just
easy
control
for them.
everything there.
So why do they need a chain?
Huh?
Why do they need a chain at all then? Why don't they just use a database?
They can do on-chain stuff. They want to interact with Ethereum. That's very important. But they want to have their own like environment that they control, where they can, you know.
I mean, the reason they would want a chain is, you know, mainly for payments. Like if you're sending stable coins anywhere, currently Visa, MasterCards, they charge 2% fee. You can just, you know, do interchange for much cheaper. Why would you not do that? Like chains give you like T minus 1 finality, which I think is much faster than whatever they get currently. So if you can leverage that.
Could I just
Yeah.
circle, Christian? You kind of said like that we tried all these layer 2s and that's dead. But like, why most of them are still running. They're still operating. They're still tracking
They
ledgers.
They're
running.
running, but like
Why couldn't a bank
who's
buy one
using
out
them?
and use it entirely?
That's not
it's
really
like
fair,
it's
like-
all it's been
It doesn't.
purpose-built.
Well, it
Why
doesn't.
would they spend money buying one out when they can just make their own? With
Yeah,
like
and,
minimal.
like,
If
cus-
they don't care
custom
about
architecture.
decentralizing the validator
But I
set
mean,
and,
like, buy the
going,
labs, buy the team. You know, you like
No,
and then
no.
use the
I-
chain.
But it's
I
really
would
not
bet
that hard. to,
running
like-
your own L1 will probably be more expensive than an L2 node, especially an L2
Sure.
that like
to do it properly.
But these are like
they're
like
bringing
these
a lot
companies
of
have a
risk.
lot of money. Like
Yeah, I know, but
that's not
it's just it's a
concern.
higher cost. Like
Why would
over
running
the long run.
L1 be expensive than an L2 if you control the validator set?
The data?
I would say like the amount of state growth that it needs to keep track of.
Why are
Would be
you
different.
why like you can have one archive node and why are you keeping historical state in the first place? Just prune it.
Well, that's one way to
Well,
cut
no,
the
but I
cost.
feel like if you're like Stripe, like you don't want to prune anything.
Think
Oh,
about
you're saying
think
pruning from the
about.
validator node, not
I
from
still
the
think it's
archive
like
node. Oh, sorry. Okay.
incentivizing geographically distributed nodes.
Does Stripe care about geographically
They don't
distributed
care
No,
about
nodes?
no, but they still do at the edge. They would still do. They would still have some sense of what region you're in for
Yeah.
performance, right?
Yeah.
But I
wouldn't it
guess
be-
with the central, I'm just let's compare it to like centralized sequencer L2 like base. Okay, if I'm building an application that just lives inside base as an L2 like a rollup DApp or something like my payment system or whatever, I get access to all of the stablecoin that's bridged there. I'm composable with other DeFi protocols within that rollup and also on the base chain. Coinbase is really paying the cost of posting that data and running the infrastructure. It seems like a better bet when you're growing and maybe new, and then if you're an established player, like you said, maybe you're willing to eat that cost. But
Yeah.
it just seems like hooking into an existing ecosystem as an during an incubation period, or for like proving out certain concepts, maybe is like more performant and efficient.
I mean, if you are Stripe, like you have distribution solved already. Like you have all of the coins you would, want to bring on chain solved. So if you're choosing between making your own chain versus, building on base, if you build on base, you're essentially leaking all the distribution you have on base to like other, base things that may exist. If you make your own L1, you essentially are
No,
not
But compare it also to like making your own L2 in parallel with base.
like
Because you skip that.
Stripe making an L2 versus Stripe making an L1.
Yeah. Well, no, I guess I'm thinking of it in like as grades of like living in an existing L2 as a DApp, and then like having your own L2 like app chain sort of thing. It's like focused on one thing, maybe payments, and then having your own L1 that is just happens to be EVM compatible and has bridges elsewhere.
Yeah, I mean, but then what is the difference like between the L2 having your like own L2 app chain versus an L1? It really would not be cheaper to have an L2 because I mean
Doesn't offload any like responsibility. Like I feel like it does. It offloads that responsibility of having to run more infrastructure and nodes and keeping them secure and whatnot.
like I mean it offloads responsibility, but then you're also paying the fees of settlement.
But those aren't like that high, right? For like a roll up, like how much is like base or Arbitrum?
I feel like there are also 4 different L1s, EVM compatible L1s that then just elected to become L2s. Why would they do that if it is equivalent, like you're saying?
If
Like Silo, I think is one. Silo?
I mean they've
CELO?
I mean, like they've choose to be L2s because like by being
hype.
an Ethereum L2, you get access to Ethereum liquidity much easier because now you can have like almost like a native bridge from Ethereum to like L2. But like at from like an L2 point of view, at least from in my personal view, like if you are a large enough L2, if you have distribution, there is no reason for you to stay as an L2. Like you stay
so
as an
distribution is the piece that's like once
Like-
you have that, you don't need
Yeah.
any.
like you initially become an L2, so you can like you can get access to Ethereum's liquidity, like you can use it to bootstrap yourself. You don't really need to like worry about economic security because your L1 solves for economic security. For a player like Stripe or L2 that's large enough that has a stronger economic like validator set, they don't care about economic security. Like it's the same reason you can compare it to you can compare it like almost an AVS. Like why would you run an AVS over an L2 or an L1?
Does everyone know what an AVS is? What are you talking about? It's an actively validated service in the Eigen layer, now called EigenCloud.
Like basically, it's a very very small small scale blockchain. But like again, the reason you run an AVS, which is like a small scale blockchain that borrows economic security from Ethereum. People stake their restake their ETH and saying, hey, I want to provide with my Ethereum to like this other like. Only reason you do that is you don't have a strong enough economic set or validator set that you can use to like secure all the computation that's happening on your chain. Now, if you become large enough, if you have if your token is big enough, if you have enough economic security, there really is no reason for you to be an AVS. Same with an L2.
So is this bullish ETH or bearish?
Bullish because
bullish because most L2s are still bad. Like they're not at the level where they can become an L1.
They're still all like EVM compatible, right? So at the end of the day, I think you're still gonna have Ethereum as like the primary like settlement chain that everybody's like. Most of like TVL is gonna be on Ethereum still, I believe.
So because they're EVM compatible, Circle, Stripe, like they're all gonna need ETH on that.
You have like Aave, you're gonna have these like core DeFi primitives that are gonna be like still mainly on Ethereum, and I'm gonna be interested as somebody using Arc or Stripe chain to tap into the yields from like DeFi on Ethereum, I think.
No, I'm like being EVM compatible doesn't imply that you use ETH as your native token, right? You're just like running the same operational structure.
You're connecting to Ethereum. Like
they're not going to have their own native tokens.
No, you're not. Just by virtue of being EVM compatible does not mean.
What it means, it means anyone can build a seamless bridge between the chains.
Sure, but at the end of the day,
layer 0 can deploy to any EVM.
Oh, sure. No, it's like it's convenient that the infrastructure is similar to Ethereum and other EVM chains, so you can easily hook up to like the larger EVM ecosystem. But it doesn't imply that you have to use ETH as your native token.
They won't.
And it doesn't imply
using USDC as their native token.
But like also, you could even argue that like at the end of the day, like people can. It makes it easier for people to bridge to and from it, but it's like just because that's an already known way to connect to something, but it doesn't necessarily imply like, oh, this is really good for Ethereum itself. You know what I mean? Like, I think it's obviously net positive and it's just easier and it hooks in easier, but it's not like directly giving revenue back to Ethereum.
Yeah, not necessarily. I think it's like that the interoperability, right? Like they could be like some of these other guys who decided to build their own custom L1, but people have realized, the biggest companies that are going on chain have realized that no, we have to be EVM, we have to be Ethereum virtual machine compatible if we want this to be like a viable product. Yeah.
You know what else is a viable product that's EVM compatible?
What's that?
Hyperliquid.
All right, that's all we got time for.
Yeah. I just wanted to say one more
Julian.
thing is that I feel like we're missing like some idea of network effects and like the richness of an ecosystem that you would get by being in Ethereum, being an L2 in parallel or just being involved with it. Whereas I feel like these chains, especially the Stripe one, is going to have one thing to do, which is whatever you do on Stripe, like e-commerce and payments, and it's not going to be that interesting, and they're not going to attract many participants.
there's not going to be nearly enough shit coins on Stripe chain.
Yeah, exactly. There's not going to be like the activity that people would look at and be like, all right, there's a lot of different groups. There's people that are excited to build there. There's new developers coming on.
You know
From, like
it'll
my
probably
Stripe
be?
like
This is hard
generative
to quantify.
PFP collection.
Yeah. They're not going to have the same rich ecosystem or even lore, which are like kind of intangible, metaphysical. I think it's going to fail within like a year.
I mean, but the real question is like, does
Yeah.
Stripe care about having an ecosystem in the first place? Stripe,
Everyone else will care.
everyone else can
They
care.
they
like-
clearly don't care. They
Yeah,
clearly don't.
clearly, like Stripe wants their chain to be a payments chain. If it does payments well, it will solve Stripe's problem of not paying interchange. That
Wait.
solves a lot of problem for Stripes. Like all the payments happen on this payments chain. Like Stripe is happy. Why do they care about like having Aave on the chain? They don't. No one gives a shit.
Jazzy,
Or
are you
like
saying that?
the next Aave?
Sorry, I'm just really confused. I'm just realizing I don't even know why or how this thing works other than payments. But like, is it twofold? One, like, are they going to enable everyday people to like use crypto, like when interacting
yeah.
with?
Yeah, seamlessly within
Application.
their app, you're
Or-
going to be using crypto. Just like it's gonna be the same app, but it's like crypto on the back end.
Oh, the back end script. So it's not even like that's abstracted from the user
Yeah.
anyway. It's just
Oh,
making
yeah,
everything
yeah.
cheaper and easier for
Yeah,
them.
Yeah.
exactly.
But it
yeah.
won't have will it have a component where it's like you could kind of, I don't know, like PayPal in a way, like maybe like deposit crypto to your Stripe
like-
account and then start to use it, and then like you can on the front
probably.
end and the back end.
Don't know yet. It's very
Alright.
near.
Yeah, we don't know.
But
But
probably,
again, I
yeah.
feel like this
But
has
that's their
been
whole
tried.
infrastructure.
We've had these private chains before. Like we've had these intranet kind of things, and they didn't work. I'm not, I don't know the particular case studies that have been done, but I feel like we're going to see we have to rerun it for some reason. Why?
I
Just
feel like
build an L2.
I just feel like all of the, I mean, correct me if I'm wrong if there's something I'm missing, but like if you look back to like the enterprise chains of like 2017 to 2020, like the like Jasmy coin or all that shit, like they didn't have like a purpose, like they didn't, like it was just like all, I don't know if I've seen it in which somebody has actually tried to change their entire back-end infrastructure for like a retail or like a common app like that before.
Exactly, you're correct. Like this is why Stripe is building it because like we had these like private chains before, but the chains existed for the sake of being private. There was no there was no
Number
one
go
using
up.
it. Like now, like it's a large player building a chain for their own personal use case.
It's interesting.
Yeah, let's open it up to questions. I
Last
think we're
question.
finishing up.
I guess it's not a question as much as I'm just like thinking out loud and want to hear
Let's
everybody's
hear it,
opinion.
yeah.
But Stripe like handles the majority of applications payments across the internet right now. There are some competitors, Lemon Squeezy, other companies doing the same thing, but not nearly at scale.
Lemon Squeezy?
Yeah,
Is a
it's
Stripe
it's
competitor?
It is. It is.
Never heard of it.
I'm wondering if maybe one of the benefits they could provide is accepting different crypto payments as like a Web 2 component.
I don't see why not.
Yeah, and
Be
then
Surely.
sick.
they
Yeah.
could
Thanks,
them
right?
compatible so they can accept whatever, take a premium on that, and then convert back to their own coin. So
I feel like that is like one of the first things they would do.
yeah,
Mhm.
no, that's
So-
literally.
So that's actually good, right? Because would they force you to use the Stripe chain? Would they force you to bridge to Stripe and then or would they just let you send it via whatever network you wanted and then they would do the conversion in the background? Because like that would be way better, and then you wouldn't have to give up custody or like compromise on the operation of the network, and it would just be.
Yeah.
I mean, if they cared about what like we think as on-chain users, like I think that'd be really that'd be sick.
Yeah, I mean, like Stripe can do the thing, where if you use a Stripe chain, you pay like 0 fees. Whereas if you use some other thing,
Mm.
you have to pay the gas fee. What else?
I mean, I'm excited.
Could-
That's bullish.
Could be really good for adoption.
Yeah.
Oh yeah. All
I
right.
like the optimist
Buy-
take
buy
at the
Stripe.
end. Good.
Where do we buy
One-
Stripe?
Where do you buy
Really,
Stripe?
I'm gonna short it. I don't know, but I don't know
Can-
about you guys.
Can you? Is it a private?
super
It's
big.
private company?
antithetical, I
It's
know.
private.
You can buy it on Venables, maybe. No.
Yeah,
was that?
Venables. That looks pretty cool.
It's-
On a new like.
We're being
What?
played
Oh, it
out. I
says
think.
Music up there.
Oh
Yeah,
my
yeah, yeah.
Yeah.
I mean, that's the
I
time.
was
That's
tripped
a
up.
sign. When you said Hyperliquid, I was like, okay, we have one more question. The band started playing upstairs though. Who?
One more question. Let everybody have their turn.
Oh my God.
Hello. Do you have any takes on the stablecoin legislation and how that's going to affect payments, like, adoption of payments?
No.
Stable coins to 3 trillion.
Yeah, a lot of people are gonna be using stablecoins within the next, I don't know, like 5 years. Everyone's using stablecoins.
Stablecoins are good.
They desperately, U.S. government desperately needs them because it's a buyer of treasuries.
Exactly, that's the main thing. Yeah. China's dumping all the U.S. bonds, and somebody's got to be buying those up, or we're all in trouble. So use stablecoins.
Prediction.
Save the planet.
Who wants to hold
launch
these very
something
stinky, these very stinky instruments?
Guaranteed.
Yeah, it's good. It's bullish. Like the legislation hasn't like really said too much, but like it's enough that every company is going to be like using stablecoins. All these applications, fintech apps people use today, they're going to integrate stablecoins, blockchains. So like, it's gonna be good. I'm excited for it. You have something to say, Alex?
Beautiful.
Okay. Any other opinions on stablecoin legislation?
Any other questions, comments?
All good.
And
All right.
let's call it while the theme song's playing.
Yeah.
Thank you for
Yeah,
coming.
playing us
everyone.
off. Thanks, everybody.